And it's the currency markets which have continued to see some pressure. The rupee continued its downward journey as traders shrug off the new set of measures announced by the finance minister. Traders say that in absence of any strong signal on the growth front, from the government, it is hurting the Indian rupee. On your screen, it has been a one-side go for the Indian rupee. We have closed 0.5% on the lower side today. Let's get in then Mr. N.S. Venkatesh. He's Treasury Head, RBI Bank, and he joins us for the currency leg of the show. Mr. Venkatesh, hi, welcome. We started 0.5% on the higher side. We've closed 0.5% on the lower side. What do you think the rupee traders really have made of the FM statements?
No, I believe that they were looking for some more, maybe a concrete sort of plan. So I think whatever the statements that were being made by the FM, it was essentially saying that the PSUs will come out with the bond issue. So the time frame, the plans and all those things, those concrete things were not available. Hopefully, I believe that he will announce that in the press conference, which is expected any moment now. So if that happens, then we'll get more clarity. So because it was a sort of a general statement which was there, the market was expecting more, which was not forthcoming, which I believe made the market more nervous. And there were a lot of short coverings which had happened during the end of the day, which had pushed the rupee dollar to at around 67.27.5.
Mr. Venkatesh, when you said the markets were expecting more, how much more were the markets expecting? And do you think the finance minister really would deliver that?
No, I personally believe that, if you look at the trade numbers are favorable, and the FM has very clearly indicated that the current account deficit will be capped at around 3.7% of GDP, which roughly works out around 70 billion. So I think there are firm steps which are being announced, either maybe through the import compression route, that sort of thing, or maybe export promotion route. So I think that the next set is how do we finance this current account deficit? Maybe that is where maybe the capital account flows, which he had indicated that he will take steps to increase the capital account flows. So maybe the market is waiting for what exactly is that steps that is coming through. Hopefully it should get announced in the press conference.
For the rupee, clearly the market or the day hasn't ended, Mr. Venkatesh. Not only are we awaiting the FM press conference, but the IIP numbers, the inflation numbers as well. What are you reading into it? While markets are looking at a negative IIP numbers already, do you think it can be worse than what the markets already have it on?
I think the consensus is negative 1% vis-a-vis the 1.5% we saw last month. So at negative 1% also still it is hurting the economy to that much extent. The trade numbers which we are seeing, which shows that actually the oil imports have gone up, whereas the non-oil imports have fallen down, is also an indicator that maybe the non-oil imports relating to the manufacturing sector is also having an issue that will get reflected in the IIP numbers. So to that much extent, the growth story is also getting crammed. I believe the market is a little bit worrisome compared to the growth story that they are looking at, coupled to the fact that maybe the exchange rate stability also needs to be brought into place. Once that exchange rate stability comes, then only the central bank will be in a position to unwind its short-term measures that they have taken.
Vijay, reading into the negativity that the markets are expecting in any case from the IIP numbers, how would you look at the rupee on charts, and what's your sense now for the truncated week in any case that we have?
Manisha, there are a couple of factors which will raise the volatility levels in the rupee-dollar trade. Number one, you have quantitative restrictions on the amount of exposure that every broking member can take on the currency derivative segment on both the exchanges. Number two, you have, like you rightly said, a truncated week, which would mean the markets will lack depth. Impact costs will rise up sharply, and so will the beta factor. Now, as far as the outlook is concerned, the larger outlook is concerned, I would stick my neck out and continue to maintain that the long dollar short rupee trade is still open. And as long as the rupee manages to close below the 60 to 60.80 levels, I think the dollar is showing signs of strength here. And should any kind of negative announcement, for example, the IIP numbers fall below market expectations, or there are some other outlier kind of negative news triggers emanating from the domestic economy, I think the dollar has the wherewithal to go past the 61.95 levels in a fair hurry, and that amplitude is likely to basically also trigger off a flurry of short covering. So my guess is the downside is somewhat limited as compared to the upside. Of course, I'm not seeing it beyond 61.20, 62.20 to 62.40 band either.
Mr. Venkatesh, what's your sense coming in for the currency now? Because if you look at the 1 year forwards, those are still holding at around 65, and the market's really not taking a view for an appreciative rupee here.
I do agree. There is a little bit of a nervousness or maybe a little bit of bearishness in the market because there are lots of steps which the market is expecting. Maybe the PSU bond issue, the NRI bond issues, those sort of things. Hopefully, I think if those sort of announcement comes, because it's now a question of how do we finance the current account deficit. So I think if the financing plan is put in place, then it should be rupee positive. If the financing plans are getting delayed, every delay is actually making the market more nervous. That's why you are seeing this sort of rupee movement. Whereas if you see the dollar index is not strengthening, dollar index is at those levels, and the other currencies like the European currency or the GBP, those are all actually strengthening vis-a-vis the dollar.
Final question, Mr. Venkatesh, before we end the show, and this is about the short-term measures that the government seems to be calling, all the measures that it has taken. Now, the markets really are worried on there's no duration of this time, and all these measures are on an expense of a growth. Is that something that would worry you as well?
If you look at it from the economic perspective, yes, if the short-term measures of liquidity being sucked out, the short-term rates being kept at elevated levels, if it continues for more than 3 months to 4 months, then it will pinch on the economy growth. But having said that, the prime concern now is managing the exchange rate volatility, bringing a sense of stability to the exchange rate. So to that much extent, I think this measure is warranted at this particular point of time. Otherwise, the financial stability itself will face a serious threat. So I think the government as well as the central bank, I think they have taken priority of managing the exchange rate at this particular point of time, which is the right step, I would believe.
Okay, final 30 seconds, Mr. Venkatesh. Where do you see the rupee sliding in the worst case scenario?
I would look at it maybe it trading between say around 61.10 to say around 61.60-70 levels.
All right, so that's a view really coming in from our experts. The rupee, of course, has seen a very sharp slide from the kind of highs that we saw it opening on. But Mr. Venkatesh and Vijay, thank you so much for joining us and giving us the sense on where you think the rupee could be headed in next few days. But with that, completely out of time on the show. Thank you for watching.